raise about 250 million US dollars. The IPO, deemed the second highest in the region after Safaricom, is being seen as a game changer for the securities exchange as well as a major leap for the Uganda telecoms business. KTN's deputy economy editor Abi Agina spoke to the MTN Uganda CEO Wim Vanelput in an exclusive interview and brings us this interview.
Of course, MTN is big in Uganda. You also have a presence in South Sudan as well as Rwanda. And Kenya is a fairly advanced market when you look at the telco business. And perhaps let's just begin from there. Why Kenya?
Well, you know, we are listing on the USC, the Uganda Securities Exchange. We're doing our IPO as part of our license renewal obligation. And we have requested for authorization from the CMA in Kenya to be able to advertise and promote the IPO also within Kenya, which means that now I'm allowed to sit here and talk to you. We're also allowed to run advertising in the newspapers. We're allowed to go on radio, have a press conference. Because, of course, Kenyans or anybody else in the world, you can always participate in the IPO. But the difference is that the CMA gave us approval to actively advertise and do the marketing of the IPO within, you know, this jurisdiction.
All right.
So it's exciting moments because you know, the Kenyan capital markets are more advanced, I would say, more developed.
Sure.
So there's a longer history in Kenya, Nairobi, of course, on the stock exchange here. So we believe, you know, that by promoting and actively advertising the IPO, we're going to have some very good interest from the market here. There is a big giant working here on half of the stock exchange here, Safaricom. So
sure.
The Kenya market, of course, is very familiar. Not say that we are in the same league. I think we are a bit smaller, but the Kenyan investor in general, I think they're very familiar with telco, with mobile money. So this is a good opportunity for us to actively, you know, tell the Kenyan market about this investment opportunity.
Fantastic. And Vin, just talk to us about the size of the business to get a better appreciation and, of course, some history behind this. And
sure. So MTN Uganda today has 15.5 million customers. We started in 1998, so that's 23 years. We're now in Uganda, 23. We've been growing consistently. We're the biggest taxpayer or tax contributor because we collect a lot of tax on behalf and we're passing it on.
Sure.
So biggest employer. When you add all the mobile money agents, going like 150, 200,000. So yeah, we are big in Uganda. Okay, the company is valued now at about 1.2 billion. So that 20% IPO is a ticket of $250 million, which I think is one of the biggest IPOs in East Africa for the last 10 years or more. So it is significant for Uganda. Of course, because we're basically going to double the size of the USC by just the one listing. But then even on an East African scale, 250 million is quite significant. So yeah, it's very exciting. And that's why, you know, we cannot do this without coming here and tell the Kenya market about this.
all right.
Very well. So I'm not distracted. Don't be misinformed. I'm not distracted. I'm looking at today's Financial Standard, which has given prominence to a lot of stories, of course, that concern you. So let's take a look at what is on the page. Let's look at the cover page first of all. So Bharti loans strategy bleeds Airtel dry. India's multinational has saddled its subsidiaries with hefty loans that experts say is a widely used maneuver to lower tax obligations in high tax jurisdictions such as Kenya. We have given prominence to that story. It is on page 4 and 5. It's a spread right there by my colleagues Franklin Sande and Masharia Kamau. We'll be telling you about the impact of that loan on telecommunications company Airtel. And of course, on page 2, Dominic Omondi says shilling slide adds 139 billion Kenya shillings to Kenya's debt in just 5 months. Of course, imagine weakening of the local currency against the major currencies has seen the country's external debt balloon to 4.1 trillion Kenya shillings. Let's look at matters energy, which is on page 3 of the Financial Standard today. Why it's now or never to save Kenya's oil dream. We're looking at the impact of having the oil, the crude oil wells in the country, and of course the impact of getting that oil, albeit to benefit the Kenyan economy. And lastly, of course, on the last page, we normally have our opinion editorials. Professor Edson Iraki right there, letter from Accra, looking beyond the Azonto and the gold. These are stories that we're giving prominence right here on the Financial Standard. You can grab a copy of the Standard newspaper physically on the street, in your supermarket, at the mall, or you can request for delivery